The US-China trade war has taken a significant turn. On April 2, 2025, the United States announced a new round of tariffs on Chinese goods. This move has further escalated tensions between the world's two largest economies. The decision has sent shockwaves through global markets and has sparked condemnation from many countries. The new tariffs are substantial. They target a wide range of Chinese products. The US argues that these tariffs are necessary, claiming that China engages in unfair trade practices. However, critics argue that these tariffs are harmful, believing they will hurt businesses and consumers. The situation is complex and has no easy solutions. The outcome of this trade war has far-reaching implications and will impact the global economy for years to come. This essay will delve into the details of the new tariffs, examine China's reaction and the global response, explore the potential economic impact of this trade war, and provide context on the history of trade tensions between the US and China. The new US tariffs are wide-ranging and represent a significant escalation of the trade war. Starting April 5, 2025, a baseline 10% tariff will be applied to all imports from China. This baseline tariff will then be adjusted upward for specific products by April 9, resulting in an average tariff rate of 76% on Chinese goods. Certain goods are exempt from these tariffs. These exemptions include steel, aluminum, automobiles, and critical minerals. However, the vast majority of Chinese exports to the US will be subject to these new tariffs. The tariffs are designed to target a broad swath of Chinese industries, including electronics, textiles, and machinery. The goal is to pressure China to change its trade practices, such as intellectual property theft and forced technology transfer. The tariffs are also intended to reduce the US trade deficit with China, which has grown substantially in recent years, reaching $1.2 trillion in 2024. The US administration believes that these tariffs will encourage domestic production. These tariffs represent a significant blow to Chinese exporters, likely leading to increased costs for Chinese businesses, potential job losses, and slower economic growth in China. China has condemned the new US tariffs and has vowed to retaliate with countermeasures. They view these tariffs as unfair and a violation of international trade rules, calling for their immediate cancellation. China argues that it has been making efforts to address US concerns, pointing to the Phase 1 trade deal signed in 2020. However, they also argue that the COVID-19 pandemic hindered their ability to fully meet the terms of this agreement. China maintains that it is committed to free trade and open markets, but has made it clear that they will not back down from a trade war. They are prepared to take reciprocal actions to protect their own interests. China's response is likely to include tariffs on US goods, potentially targeting key US exports like soybeans and aircraft. They may also consider other measures such as devaluing their currency or restricting access to their markets for US companies. The international community has reacted with concern and criticism to the new US tariffs. Many countries have expressed worries about the impact of these tariffs on the global economy, with some announcing plans to retaliate with their own tariffs on US goods. The European Union has called the tariffs a major blow to international trade and is preparing countermeasures to protect their own industries. Canada has also announced plans to retaliate with tariffs on US goods. Japan has expressed regret over the US decision, while South Korea is preparing emergency support for its industries likely to be affected by the tariffs. Australia and New Zealand have condemned the tariffs, expressing concerns about the impact on global economic growth. The widespread condemnation highlights the global interconnectedness of trade and underscores the potential for these tariffs to trigger a global trade war, which could have devastating consequences for the world economy. Section 5 Economic Fallout Markets Real Recession Looms. The new US tariffs have sent shockwaves through global financial markets. Stock markets around the world have tumbled. Investors are worried about the impact of the trade war on global economic growth. The Dow Jones Industrial Average, a key US stock market index, has fallen by 2.5%. The S&P 500, another major US index, has dropped by 3%. The tech-heavy Nasdaq has plummeted by 3.3%. These sharp declines reflect the growing uncertainty and fear in the markets. Gold, often seen as a safe haven asset during times of economic uncertainty, has surged to a record high. This further indicates investor anxiety about the potential for a global recession. Economists are warning that the trade war could have severe economic consequences. Some predict that it could lead to a global recession. They estimate that the tariffs could cost each U.S. household $5,000 annually and push inflation up by 6%. Small businesses are particularly vulnerable to the negative effects of the trade war. Many are already struggling with rising costs due to inflation. The tariffs will further increase their expenses, forcing them to raise prices or cut jobs. The automotive industry is also likely to be hit hard by the tariffs. Foreign car prices could rise by $5,000 to $20,000, making them less affordable for consumers. The housing market could also be affected, as tariffs on lumber could lead to higher construction costs.